Ladies and gentlemen, good day and welcome to the Birla Corp Q1 FY24 earnings conference call hosted by HDFC Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Kumar Ravi from HDFC Securities. Thank you, and over to you, sir.
Thank you, Dorwin. Good afternoon, everyone. On behalf of HDFC Securities, I welcome you all on the Q1 FY24 earnings call of Birla Corp. From the management side, we have today Mr. Sandeep Ghosh, MD and CEO, and Mr. Aditya Sarogi, CFO, to discuss the same. I now hand over the call to the management. After their opening remarks, we'll open the floor for Q&A. Thank you, and over to you, sir.
Good afternoon and welcome, everyone, valued investors and analysts. This is Sandeep Ghosh, and I have with me Mr. Aditya Sarogi, our CFO, and key members of our E-team. Mr. Rajat Prushti, who is the Chief of Manufacturing and Projects. We have Mr. Kalidas Pramanik, who is our Head of Marketing and Sales. We have Mr. Arun Agarwal, who is the CFO, the Financial Controller. And we have Mr. Tamal Pal, who is our Head of Strategy, and also he looks after our mines and land acquisitions. So once again, thank you very much for joining. We are quite overwhelmed by the number of you who have come on the line. In fact, as you know, last quarter was our first Concal which we held and in the company, and we weren't too sure about the general level of interest, and we didn't think that we would probably be holding it every quarter, but going by the interest evidenced by all of you at the conference, and then subsequently also we held a few road shows where we met people, we felt that it's probably warranted that we come back and speak to you after the first quarter. I will give a brief overview of both our performance and how we have looked at the market or the overall industry scenario. First thing is, for us, this quarter from our standpoint has been quite satisfactory, or I would say it's really confidence giving to our own leadership team, because we had embarked on the new year or the last quarter from January with a new team at the helm, and also revisited our strategy in the light of all the developments, in the light of not only Mukutban but our overall business and growth plans. And the first quarter was confidence giving, because we seem to get the initial kind of results which we were looking for directionally. We were seeing that as sort of vindication of our policies which we undertook. Many thought maybe that's a flash in the pan, and therefore it was important for us to validate the strategy of where we were moving forward even in the first quarter. And at the end of it, therefore, we feel quite satisfied with the outcome, and it gives us the reassurance that probably we are on the right track, while we have to constantly recalibrate, measure, reorient our way forward path, because we are ultimately living not just in a volatile and uncertain world, but we are living in an environment of disruptions and non-linear development. So one has to be vigilant, one has to be able to quickly correct course. And for that, as I had mentioned to you all earlier, we have now moved in our management cycle. We have moved to the OKR principles, which is Objective and Key Result Principles, which were earlier used primarily by a lot of the leading tech companies like Intel, in fact, had pioneered it, and then Google, then Adobe, Microsoft, a lot of these people took it. But now it has become the order of the day because everybody sees that you probably need to cut down your planning cycle and look at deliverables quarter-wise and with not just deliverables at the end, but also key indicators or key results which will show that you are proceeding as per your longer-term direction, because ultimate goal remains the same. You just keep on adjusting your path. So the OKR principles seem to be working in our case. We have now had a formal rollout of OKR. We are working with external consultants, and we have rolled it out. We've got an OKR platform. The idea being that you need to bring all operating people on the same platform so that they're totally aligned to the corporate objectives, and they deliver as per on track, and they can see the results. They have transparency to see the objectives of their seniors, of the corporate objectives, and how they're contributing, and that's how they get rewarded and recognized. This is critical for us, especially for among everything is important, but especially for Mukutban, which is, I think, a matter of interest for all of you. And in Mukutban's case, we have been following the OKR very closely, and I'm happy to say that we have been seeing steady progress there. The progress has been the most notable progress we have had is in terms of reduction in costs. In Mukutban, we are going down on a very steep fall in the cost levels as predicted, as projected by us, as the volumes are not only being ramped up, not only due to the volume ramping up, but all the other efficiencies which we had planned for, especially in power, thermal conservation, with full implementation of WHRS, efficient running of our CPP, but more importantly also, getting our mining operations up to full speed, use of internal, captive mine limestone to the maximum extent possible, also improving our clinker quality, due to which we are not required to buy or get third-party clinker or clinker from any of our plants to produce the higher grades of OPC, etc., which we have announced. So there are a lot of technical improvements and innovations which Mr. Prushti under him, his team has done. So we are extremely satisfied with how the cost curve is behaving, and we see that progressively coming down in the subsequent quarters, exactly as we had predicted. On the sales side, we have been ramping up, and there has been a little bit of a chicken and egg story out there, essentially because of the depressed prices in the Maharashtra market. Now, how that helps, why is it a chicken and egg story? It is because it has been our plan to gradually extend our footprint within Maharashtra from the immediate vicinity and proximity of the plant. So in the previous quarter, we were operating within about 200-250 kilometers from the plant. That was really our core market, which was essentially Vidarbha and parts of Khandesh. Our plan was to now extend it further to go down towards Nasik, Aurangabad, and other areas. But while going down, as you realize, it calls for, involves additional freight, and the additional freight you can compensate only if there is better realization. Now there we got a little handicap because prices in Maharashtra were unexpectedly depressed, I would say, than what it was in other regions, even in comparison to other regions. So that made sometimes a difficult choice as to how much we want to invest in seeding the market going forward and how much we want to pull back to stay within the positive contribution. So that required careful balancing. We tried to make up for that through three initiatives. One, our thrust, even in the Mukutban market, though we have gone there, we are new entrants there, our thrust has been largely on the premium product, which is our Perfect Plus. And we are happy to see there is a brand recognition of Perfect Plus, because Perfect Plus had gained some kind of national identity, because we had been supporting the Perfect Plus on national mainstream media, especially on television, with very key properties like cricket. Some of you who are cricket fans would have seen the Perfect Plus advertisement coming, not in a big way, but in a very noticeable way, as Aston lands below in the World Cup, in the Test series which just now happened, and on ODIs, etc. So, and this has been happening systematically over since the time we had launched it. That is in 2016, 17 beginning. From there, it has been accruing. And we are pleasantly, therefore, not surprised, but we are happy to see that that recognition carries through, even in Maharashtra market, coupled with our quality. I think the Mukutban plant has been producing excellent quality, quality-wise, and there is a lot of confidence in the local stakeholders, local market about this being, although there are a lot of other plants present, but in the kind of, when you see the plant, some of you have visited the plant to see, it's really a state-of-the-art modern plant with very, very advanced quality control systems, and due to which, and that the proof of the pudding is in the eating, because they see that translated in the product. So Perfect Plus is giving us our percentage.
Almost 45
So about 50%, 45 to 50% of our sales in Mukutban, in the trade segment is of Perfect Plus. And overall, as you see in the company, we are around 54% in the premium category, nationally across all units. So when Mukutban is picking up at 45%, that shows that we feel is encouraging. Now, along with that, when we are talking about logistics, our logistics, we have been trying to make, again, innovations. We have increased our direct sales from plants, DSOs, and DSO percentage of Mukutban has gone up to as high as 65% of our road dispatches from Mukutban. We have improved our rake loading efficiency, and both mini rakes and full rakes, and giving our whole packaging of plant operation, cutting down on demurrage and loading time. So that to reach further points. So we have now started reaching areas like Nashik, Aurangabad. These are within Maharashtra I'm talking about. Other areas we were already reaching. I'll come to that later in Madhya Pradesh, Gujarat, etc. So that has started giving us. So directionally we find, had the prices been a little better, we probably could have ramped up much more aggressively during this quarter. It did not happen as fast or as aggressively as we would have liked to. But still, I think we are ahead of what our own original estimates or anticipation was. As we go forward into the third quarter, with costs coming down, and even if the prices were not to improve significantly, I think we are better off to spread out further and go on. As on date, our Mukutban average lead is how much?
384 kilometers.
We are doing 384 kilometers average lead, but the 384 kilometers is higher because of the other, we are also supplying in the Madhya Pradesh and Gujarat, etc., which is growing. So within Mukutban, we remain at about between 250 to 300 kilometers is what we are doing in terms of Maharashtra. We have seeded Telangana market, which is just adjacent, and it's actually a natural extension. We are again finding their acceptance of the brand to be quite good. So that's broadly, I think, the picture on Mukutban. I've dwelt on it at length because that I know is of great interest to
21% growth over quarter 4.
And the growth in Mukutban has been 21% in volumes over Q4 of 22-23. So that gives you the overall, I think, flavor of what's happening in Mukutban. But all other building blocks in Mukutban are right now in place in all functions. And so operationally also, I think we are getting more efficient, and we are beginning to also look at on the operation side how to bring down our cost structure, because in terms of right sizing manpower, because at the project stage you probably had a little bit of a higher bench strength. All those are being rationalized. So Mukutban, in terms of as a standalone operation, because it's a major unit of RCCPL, which is a subsidiary, we have our eyes totally on the ball, and so far we have satisfied, I repeat myself, with what's been happening. Now, keeping aside Mukutban, I saw some comments in the analyst report talking about the growth which we have got in terms of volumes and in terms of pricing, thinking that most of the upside has come from Mukutban. I would like to I'd like to clarify or elaborate on that to say that our performance in our existing core markets has been, again, in our internal assessment, quite commendable. First of all, talking about capacity utilization, including Mukutban, our total capacity 91%. But if you were to look at the capacity utilization of our remaining plants, it has been at a whopping 105%, which I would think would be one of the best in the industry. In terms of capacity utilization, there is all our existing plants, Maihar, Satna, Chanderia, Kundanganj, Raebareli, all of them have produced ahead of their overall capacity. As a result, this is a question a lot of times asked by some of you in our offline conversation about our clinker utilization. Somebody was quite cynical about why would we like to transfer some clinker from Mukutban to Durgapur. Does it make sense? Yes, it makes great sense, because our entire clinker production of Chanderia, Satna, Maihar are totally utilized in our highest realization and in our strongest markets, which is Eastern UP, Western Bihar, and Madhya Pradesh. These are the markets where we are able to absorb the entire clinker and get the maximum what we call the clinker realization. And therefore, instead of supplying clinker from those plants to far away Durgapur, where the realizations are lower, and all of you know the markets in the east have been depressed, my incremental clinker from Mukutban, if I supply to Durgapur, it makes, in our calculations, eminent sense. I'm not getting into the aspects of clinker swapping. That's an option which is there, which people sometimes don't realize. So I don't always have to send my clinker all the way from there to Durgapur. There are other ways to optimize. So the Mukutban, what I underscored in our previous telecon, Mukutban one has to look at not just with the lens of Maharashtra. Mukutban gives us a great deal of flexibility and creates synergy for our entire operations. I would ask for your indulgence for 2 more minutes to explain to you what I mean the synergy. If you see our core market, at the heart of our market, is broadly what you would call what is loosely referred to as the Hindi heartland. And that is the area of Uttar Pradesh, Western Bihar, Rajasthan, and Madhya Pradesh, practically the whole of Madhya Pradesh. If you see today, Birla Corporation is more uniquely placed. We kind of encircle this area almost on a 360-degree basis from all directions. I have got two plants in Satna, in Madhya Pradesh, Mahar and Satna, in Kundanganj in UP, Raebareli, which is though small, it's a highly profitable and efficient operation. And of course, we have got Chinderia in Rajasthan. And now, because of Mukutban, I can service the lower part of that geography, which means southern Madhya Pradesh, southern Gujarat, which was earlier beyond my reach, from Mukutban. And I can do these interchangeably. The talk of, cross-branding, which has become very, very fashionable and popular in the industry, we have been doing cross-branding way back from 2016. And that I can continue to do now today with far more ease and far more flexibility to supply these markets with the brand, with the product, which is required and where it makes the biggest sense. And we are probably, I can say with some, modesty over there, that we are one of the companies which has actually a full brand architecture with a segmented architecture, segmented both on the price level as well as in geographies. So we are one of the few companies. When I read, a lot of people are talking about premiumization, but our premiumization strategy has been very different. We have had the flagship brand, the umbrella brand, Perfect Plus at top, which we have been investing, as I mentioned to you, consistently to make it get with the critical mass to become a recognizable national brand as positioned in the A category. But below that, it's not unlike others may have brand A and say brand A premium. I have got my value segment brand, which are the regional champions. So look at Samrat in UP. Samrat is an extremely strong brand in UP, and it's a heritage brand which has been around for many years. So I get a complementary, I get a synergy between Samrat and Perfect Plus in both the segments. So my distributor or dealer has a unique position to be able to sell both a premium brand and a value brand from the same counter depending on the customer. Earlier, even for us, if they were selling my Samrat, they would have had to go and buy another A category brand to keep on the shelf of our competitors. But today, because of the Perfect Plus having been established in those markets, my distributors are able to sell both simultaneously. And why am I belaboring on this? I'm belaboring on this because we have seen the impact of that during this period, where even in the overall in the company, you will see in the overall terms, my premium sales has gone up from 51% to 54% of my total trade sales. And much of this increase has therefore come from my core market. Why one is happy or one is proud is, as you know, some of our core markets have seen very, very intense competition in the last 6 months with a lot of new entrants in that place. That we have not only been able to hold on there, but actually consolidate and premiumize in that market is, I would give a lot of credit to Mr. Pramanik and his team, which is, I would consider, one of the best sales team we have in that region. And last year, for a variety of reasons, Madhya Pradesh was probably underperforming. But today we see Madhya Pradesh also picking up despite the intensity.
Grown 21%.
And Madhya Pradesh has grown 21% in the last quarter. Okay, so we are getting, and all that growth is really coming from the premium segment. That's Perfect Plus. It's driving the growth with some amount of growth coming from Rashak, which is our waterproof super premium brand. So the brand strategy seems to be in place. We are not complacent about it, but we know that we have the right assets in place in terms of our distribution assets, go-to-market assets, and in terms of the brand and marketing assets. and certainly the people assets in those markets. So that gives us our confidence. The next area on which we have obviously been focusing is on logistics. Logistics, apart from the conventional way, where we have done, I think, well, is in terms of movement of fly ash in rakes over there. And there are two kinds of rakes which we are doing. A lot of other people are also doing ordinary rakes where they're making conditioned fly ash with, straight. But we have been pioneers in investing in the BTAP rakes and having, that's where Kamal, who's our strategy head, he has played a big role. We have done that, and today we are one of the highest movers of BTAP rakes to our plants, especially in Madhya Pradesh. And the BTAP rakes give us, between BTAP and your normal wagons, we get about a 200 rupee benefit in the landed cost of fly ash, which is, why I'm citing this as an example, this is not a one-off example, but that is the kind of focus which we are looking at in terms of our cost management. And that is where OKRs come to play a role. The last thing again on cost, I will tell you, it's common observation that, most companies have benefited from the softening of fuel prices, imported fuel. But when you look at our fuel reduction, I would like to point out to you, it's not just a function of the lower fuel prices. Our fuel prices have come down also due to our changing of fuel mix. And much of it has been one of the areas, apart from solar, green energy, apart from our, alternative fuel trust, which has been, you find, we have already reported that this quarter we have been one of the highest use of unconventional green energy. We have actually now reduced our import dependence from 41% to 29% by beginning to use domestic coal, including from our captive mines, which will only go up. We have, I think, mentioned there with the Matibaka Vikram coming through, that will go up. So our captive coal and internal coal. So the point to be noted here is, if there is a sensitivity of tomorrow, the imported coal prices going up again, we are, I think, managed to insulate ourselves a little better than others in terms of the energy cost. Finally, we had referred to even in the thing about Project Shikhar, which is being led by Mr. Prushti there, and it is essentially manufacturing excellence, but manufacturing excellence clearly, focused on not just increasing efficiency, but actual cost reduction. We have achieved in this quarter, estimated about 30 rupees per metric ton from the Shikhar, which we are planning in quarter two. We are targeting another 50 rupees per metric ton on Shikhar. Now, how is Shikhar being done? It is not a buzzword. It is not the new flavor of the month. There have been workshops held across the factories, and there have been 4,800 ideas which were generated. Out of the 4,800 ideas, 249 projects were identified. And these projects were categorized in terms of priority from P1 to P4, and we sanctioned both OPEX and CAPEX investments on this. CAPEX was authorized by the board, which we did, and then it is being tracked on a daily basis at a central level. So that has given us, those savings. And now, in terms of cultural change, in terms of change management, we have set up, earlier, I'll be very honest in saying, Birla Corporation in its earlier days, each factory, the older days used to work in kind of silos. They were independent units. There was not too much of, cross-learning or exchange of best practices which was happening. So now thanks to IT, thanks to digitization, thanks to apps, we have been able to set up community of practices and actually encourage a copy with pride kind of initiative by which the good practices can get exchanged and we get an organizational synergy. So Shikhar has given us very encouraging results, and this we believe this will be culturally embedded in the organization, which will not be individual specific, not a person specific. This will become our way of working, the MP Birla way of working, and we should start seeing this on an ongoing basis as a lot of large organizations, even in different different industry segments, in categories of which they do this continuous improvement in the cost function. Equally, as I mentioned earlier, in marketing there is work happening, but because we have been quite frank and honest in saying earlier that we have temporarily we are kind of almost sold out on our clinker other than in Mukutban. So our idea is to increase the premiumization, but along with the premiumization, focus on our high realization geographies there. And high realization geographies, not just because they're high realization, where we have, I reiterate, our industrial strength, that is our industrial assets, present, the footprint, but along with that, most importantly, our commercial assets, which means the distribution system, the route to market, the go to market, our sales team, our brand strength over there, because that is what is going to help us, and these are investments which one has made over the years. People do not always, it's difficult to put a value on it unless you do a separate valuation. But I believe that if we were to value our brand assets and our commercial assets in any situation, theoretically also, it will put Birla Corporation ahead of many of our competitors. And as we are clearly seeing in the market, with some of them trying to emulate or follow our earlier strategy of premiumization or geomix, which has become a buzzword now, everybody talking, but they are probably not as well placed to do that as we have done, over having the first mover advantage in the last 6 or 7 years. I think I will take a breather here. I will hand over to Mr. Sarogi in case.
I think we can ask the question.
Okay, I think now we'll open it out for questions, and then we will take the questions here as a team.
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. So without wasting much time, I would request if we can get the in short answer would be helpful to address all the participants. So the first question is, last time we talked about a 15% volume growth. So are we sticking on that? How much volume we have done from the Mukundban in this quarter? Second, does that mean last time we have talked about 2 lakh volume per month? So will it remain the same for the Mukundban? And for FY25, does that mean that we can increase the utilization of Mukundban to 75%? Then the second question is on the profitability.
First, answer to your question, I think we already said that there is a 21% volume growth between Q4 last year and this year. So we are proceeding on track in terms of our volume growth. And yes, what you're saying about a 2 lakh exit, that is something which we are also standing by just now of a 2 lakh exit from recruitment. Right now, I wouldn't venture in talking about 2020, 24, 25, but this year we stand by what we had said earlier. Thank you.
Okay. Second is in terms of the profitability, we have talked about 850, 860 rupees EBITDA per ton. This quarter we have done 664. So does that mean for next 3 quarters we need to do 900, 925 type of EBITDA per ton? So in that, from here on, how much more cost reduction at the console level we can see? And if you can also talk about in terms of the pricing, that would be helpful.
Pricing, to answer first, I think everybody has assumed that there is not going to be much price increase. Price will remain by and large flat to soft throughout the year. Though, it's too early to say. I wouldn't rule out later in the year a slight upswing in prices for a variety of reasons. I don't think that is something, it's not restricted to Birla Corporation, so I will not like to comment. So we may see some tailwind on pricing, but that if it comes, it will come as a bonus to the industry per se. I'm not, factoring in it for our results. But yes, we still stand by not 860. We didn't say 860. We said closer to 850, and that is something which we stand by. We clearly have visibility of certain major cost savings coming through for us, which I would not like to discuss in an open forum just now. But we do have visibility of some major cost benefits coming our way, which gives us the confidence that we should still go for that 850 number at the end of the year. Now, it's not that it is going to move up in a continuous curve from today to March. You will have discrete jumps with some specific developments which will happen, which are expected to happen. And if that happens, and if we maintain all our other assumptions and parameters which we are delivering, personally, I would still hold the 850 as a doable target.
Okay. Just on the costing front, how much more at net OpEx we can see in terms of the reduction? Because we have talked about power cost to reduce by 250, but that is from the average of FY23. So we are already down to that number. So currently for this quarter, 1153 power and fuel cost. So how much more we can see the cost reduction from here on?
I don't think we'll go into further details just now. I think we've given enough indications, overall direction. Now, beyond that, the specifics, I think it will be premature or slightly unfair to get into. Then I'd be probably have to put before you my entire working sheets. So directionally, I think we've indicated enough, and since we are holding by our EBITDA projections, and we've indicated like the kind of costs which we are reducing in our project Shikhar, what we're doing in logistics, and most importantly, what I showed you in that how our fuel mix is changing as opposed to just being dependent on international prices. That should give you enough leads as to what's happening. Thank you. We'd like to move on to the next questioner, please.
Thank you. Ladies and gentlemen, we request you to please limit your questions to 2 per participant. The next question is from the line of Jyoti Gupta from Nirmal Bang. Please go ahead.
Good evening, sir. Good set of numbers. My question is on the raw material cost. The 2 parts to it. One is the movement of the lead distance that you have mentioned is 384. What percentage is clinker? Because it is obviously 384 multiplied by 2, which means we are moving quite a bit of clinker. Is that going to increase? And has the busy season surcharge in any way impacted this lead distance? And would it further impact the lead distance? And do we see some kind of rationalization in your raw material costs going forward?
First question is, we do not consider clinker dispatches in our distribution cost. It's purely cement duty there. And we will work on raw material reduction. There are many things which is in the pipeline. As I told you, Mr. Prishti has extremely clearly chalked out plans. He brings onto the table a wealth of experience from his long stint in ACC and in the Lafarge Holcim system. He's one of the rare people who's a mining engineer to start with. Then he has worked in projects, he has worked in grinding units, he has worked in integrated units, small and large, new units. He has done for those companies. So he brings in a lot of energy, a lot of focus, and we've got I think now a very charged up manufacturing team. So you will see benefits on the raw material cost front. Thanks.
My other question is, sir, can I ask one more question?
Lots of people at the queue, Jyoti.
Okay, I'll speak offline, sir. Thank you.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, good afternoon. Just on incentives, could you just highlight how much incentive was booked in this quarter?
We have booked about 45 crores in this quarter, and that's coming largely from Kundanganj.
Right. And this Kundanganj incentive is getting over when?
You said that it will get over at the end of this fiscal.
So it will be available till Q4 then?
That's right.
And you expect the Mukutban incentive to pick up to compensate for this loss, like from this FY25 onwards?
Mukutban will certainly start before that. Compensation, yes. Once we are in full stream, in Mukutban the incentive is quite high. This will offset, but we have other plans as well, but which are too early to discuss.
Sure. And on Maihar Line 2, is there any update? You have some plans which you're working on, you had said.
Maihar Line 2, we have always said that Maihar Line 2, we will look at it after some time. Because right now, you know our balance sheet, you know the kind of our debt exposure. We are not a company who, become, overly aggressive or adventurous, shall I say, on the debt front. We need to consolidate our thing. Our first challenge is to get Mukutban up and running to full steam. Once that happens, you'll find a lot of other things falling in place. So it's very much on the anvil, but we'll action it as soon as we are ready in a time of our own choosing, not by any external pressure.
Sure. And just lastly on captive coal mining, so certainly anyway the petcoke costs have dropped to like 1.75 rupees kcal. How much of benefit would come from captive mining given the current costs on petcoke? I mean,
first of all, petcoke is not a fuel of choice for us in all our units. Okay, and the places where we use petcoke, there the captive mining is not relevant. In other places, we have we indicated what is it roughly?
No, but our costs are still lower than despite this reduction in petcoke prices, our captive coal mine prices are still lower. In fact, the landed cost from become coal jobs is expected to be as low as 1 rupee 10 paisa.
Okay, got it. Thanks a lot.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. When will the Mukutban incentives start getting reported in the P&L?
As soon as we start receiving them,
So, in the last quarter, it was mentioned around quarter three. So will that hold stand true, or there can be changes in there?
We by and large hold that. If there is a, setback, but we don't see a major shift in that. 3 could get pushed to the end of 3 or beginning of 4 or something like that, but not necessarily, not any major shift.
And, when you reach this 2 lakh ton per month type volume, X of incentives, what kind of EBITDA per ton one should look at?
We have already set the exit EBITDA for the company.
Average EBITDA, that is average EBITDA of 860 rupees a ton. We can't get specific EBITDA from location per ton.
No problem, sir. And my last question is, sir, on the power cost. So, incrementally over the next 2-3 quarters, based on the positioning that we have, what kind of cost reduction we will see?
See, on power front, last year, because of non-availability of linkage as well as domestic coal and very, very high prices, we had largely switched to grid power. Now with the cost of domestic coal coming down and the availability also improving, we have again gone back to captive power plants, wherever we have one. Okay. So it is a dynamic situation which keeps on changing depending on the market situation, availability of coal, cost of coal, etc.
So based on the current situation, what kind of cost reduction or will you see?
Eventually the cost per unit should be more than a rupee.
Sorry?
More than a rupee.
More than a rupee per unit eventually.
Okay.
But that may not happen overnight because we have increased our contracted demand. It will take a while to reduce the contracted demand. Once all of that happens, obviously we'll start getting those savings on power.
Okay.
Next question, please.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just one question. Sir, what do we make of biodiversity? The reason I asked this is there have been like 20 odd tiger deaths this year in Maharashtra. I think the last one was in the Yavatmal sanctuary. So just wanted to have your thoughts on are we 100% sure on sourcing limestone in a sustainable way from the reserves which have been earmarked for us? Again, the reason to ask this question is prior to the current government which gave us the approval to go ahead with the use of reserves, there were 2 technical committees which had actually given an outright no. So just wanted your thoughts on this particular aspect, which I believe is quite critical. Thank you.
See, I'm not too sure where you're getting this from. We have been engaged with the National Wildlife Board. We have been engaged with the Tiger Conservation Authority. We have been engaged with the WII Wildlife Institute of India. All of that. The whole in making a general comment, all these things, the approach is one is mitigation, one is making environment friendly things. The answer is if the approach of the government and everybody is that if you were to simply look at what the kind of points which you are saying, then probably you can't have any construction, any development anywhere. So whenever you're doing it, you have to do it in a sensitive and scientific manner, and which is in the country it is extremely this is being managed very closely and at various levels. Now the point which you are saying, I don't want to get into that territory. It's not a subject of this call. Some of those things are due to man-animal conflict and things like that which are happening in certain areas, and that is precisely what the government or at the macro level they're trying to address. So if you read articles where they have said what India needs is not just an exponential growth in number of tigers and other things, it's a sustainable tiger population. So those are very larger questions. That's not really my remit or purview. But whatever we have done, we are doing in very close, collaboration and dialogue with experts, with the authorities, and this is a dynamic review. And wherever we are having to, make sometimes investment, like say somewhere we are having to actually invest in a overland conveyor belt, we are making those investments there so that there is least disturbance to the biodiversity and the flora and fauna of that area. So this is done in close, as I repeat, in close consultation, and we go by the guidance of experts and do what is required of a responsible corporation. If you know the guiding principle of this organization, our corporate principle is heart and strength. So while we do believe in the strength of our commercial strengths or anything else, we are at the same time we're an organization with a heart. So we would not do anything, and the heart doesn't apply only to humanity. It applies to much larger than that. So it includes plants, it includes animals, it includes everybody else. So we will do what is called for and everything it takes to maintain that.
Measures.
Thank you.
Right. So I was just referring to the fine print documents which are available on the Maharashtra government website. So just to clarify that point. And just to continue, sir, is there a plan B just in case if there is some disruption on supplies on limestone? Do we have a backstop plan B in place? That would be my last question. Thank you.
I don't get you. Please come again to repeat, please.
So my question is, if at all there is some problem in sourcing of limestone for the Yamatmal facility, do we have a plan B over here? The reason I asked is, earlier we have seen similar instances at the Chinderia CPW1, CPW2. So just being cautious, is there a plan B if at all there is some disruption over here? Thank you.
So, 2 points. First, Chinderia and Mukudvan are not comparable. Okay. Having said that, first of all, since you raised Chinderia, let me say, Chinderia, we have not stopped mining. We are doing mining in an environment-friendly way, even if it means some additional cost for us, because we value conservation as high as any other, activist or any other people over there. First of all, we will not do anything that jeopardizes the nature and which we do not have permission for. Obviously, this plant cannot be set up, couldn't have been set up basis availability of limestone in some other state. And even if you have some other state, the same kind of issues can arise there. We have limestone reserves earmarked for this, not just in one mining block. There are more than two, there are two, and there are others which are potential limestone blocks which are there within the vicinity. You cannot be running such a plant of 3 million tons by getting limestone from another state. And I don't know which Maharashtra government notification you are looking at. We have, as I said, the requisite permissions. We have the requisite mitigation measures in place. We have in which we have worked with authorities at various levels, and that's the way to go forward. And I don't think the government or anybody wants to shut up plants on some theoretical assumptions. They are also interested in development happening in the areas, and they will work in partnership with the industry to find the way forward.
Sure, sir. Thanks so much. I look forward for the conversation on this topic with you. All right. Thank you.
Thank you. The next question is from the line of Mangesh Bhadam from Centrum Broking. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. Sir, first question is that we have already operated at very close to 90% utilization, and probably if we achieve that 15% growth, would be very close to full utilization of the plants, which could hamper the volume growth in the future years. So, any debt levels that you would look at planning or would probably plan and make sure that the plant would come up online so that at least there is continuity to the volume growth that we are looking at. So just wanted to know the timelines when we can do and what kind of debt levels you would be comfortable.
See, first let me comment on the growth plans, and I'll let Mr. Sarogi talk on the debt levels. We obviously have a growth roadmap in mind, and I have been, all of us have been, very upfront in saying we are not looking at exponential growth and getting, and for that matter, to get into any kind of adventurism in the market or invest thing. But here we have very clear steps planned. Now, to deliver on the first 15%, we don't see that as a challenge, with Mukutban ramping up, which we are doing. So as soon as the Mukutban ramping up is in stage, we may do a couple of other things to make the operations more profitable. We have on the plan we have indicated we will be looking at the new grinding units in proximate markets, which we have still got some excess capacity available in Manson area and other places, so we will do that. And once the whole thing stabilizes there, we will be ready. I don't want to give a date and number to move for the most logical thing next would be our Maihar second line, which we will go for. So we have a clear, steady plan of both volume as well as profitability. One of the areas we would like to focus for our to create value for our shareholders, for our investors, is getting our profitability at par with the leading players, where we had been lagging earlier for a variety of reasons, and we want to catch up on that speedily.
On debt level, as we have maintained that we would like our debt to EBITDA ratio to be within 3 on a sustainable basis. We stand by that.
Understood. Sir, and just one small question, that we recently purchased a company called Sanghvi Infrastructure, which has mining rights in Katni and MP. So is this just to augment our limestone resources for existing operations, or you would be looking at having a greenfield facility there sometimes, probably in future?
So it is we look at that whole block as a total, consolidated production capacity in that block. By block, I mean that whole geography of Satna, Katni, and that area. So this is where it's part of our whole limestone bank, raw material bank, which we are doing, and which is the most cost-efficient way of doing it, whether it's a separate greenfield plant or by adding a second line to Maihar or doing something in Satna. Those are calls we will take later. But we are looking at how much production we need from that area. What is the kind of market share which we can realistically command in those areas, because we are not the only people present there. At the kind of returns that we want, we are not the kind of company who will just put up capacity and then undercut my own brand to bring down premium and everything. So we will do what is best, but for a long-term limestone security, we take a number of steps, and this is one of them which we have seen so far.
Understood. Thank you.
This is exactly how we want to, make our operations sustainable. So there are many ways we feel to augment the business rather than just setting up capacity, or buying units, etc. We have got a lot of these sort of things to do, and we have been focusing on those, whether it's when we talk of the captive coal mines, we are getting our limestone security in place, and I talked about the whole branding architecture, your distribution assets, and all of that we focus rather than just simply once upon a time people used to look at the cement industry only in terms of capacity, but we think we need to look at it much more holistically, and all these are equally important. And once all these blocks are in place, when you have your sourcing, the raw material assets, you have your production assets, industrial assets, you have your marketing assets, you have your logistics. There is a lot of work to be done, which we are focusing on because that will be the next, I think, frontier of value creation in the cement industry. All those things, everything need not necessarily happen only by addition of capacity.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. My first question is on your debt levels. So last quarter, it was suggested as around 3,700 crore FY23 end. Has that materially changed this quarter? And what is the CapEx number which we should build in for modeling purpose for FY24?
Debt as on 30th June was around 3,600 crores only, net debt. And our total CapEx plan for this year is around 1,000 crores, which includes sustenance CapEx required for Chitra project, CapEx required for the operationalization of coal blocks of Bikram and Multi-Bata, and also some CapEx which remains to be done in Mukutban, or the payments which need to be made.
The 1,000 crore is for 1 year, or like you were saying, for spread over 24-25?
No, this is for 24.
And our capacity will remain at 20 million ton post this capacity CapEx what we are in the target.
Yeah, this year there is no change in capacity. This year.
Right. And for the other CapEx or expansion which we have highlighted for going from 20 to 25 million ton,
slightly premature.
We are going into that question over and over again. We've been very clear. We are not looking at doing it just now till the time we have got our existing operations in order, which does not mean it's indefinite delay, but we'll do, as I said, at the time of our choosing. And we are not chasing capacity. And once we are comfortable, we'll do that. But because we don't really want to get, as mentioned earlier, adventurous on the financing front.
Right. And just one more question on Mukutban operations. You said last quarter cost of operation has come down from 4,500 to 2,800 per ton variable cost. Has this come down further, or is that stabilized at this level?
We also indicated, I think your supplementing questions, I've indicated that coming down is incremental and a steady coming down, and we expect this to come down. As I mentioned earlier also, it is not just as a function of volumes or volume ramp up, it is in the function of various other initiatives and things which are going to come in terms of raw material sourcing and the rest of it, so our target is far lower, and we expect to achieve that in a steady manner, and directionally we are proceeding there. So it is not plateaued, and it's far from having plateaued.
Thank you, sir. These are my questions.
Thank you. The next question is from the line of Tushar Verma, an individual investor. Please go ahead.
Yeah, hi sir. I have a couple of questions actually. My first question is on the pricing side. How are the prices of cement shaping up across various regions that we are catering to in Q2 FY24?
If you please finish all your questions. If this is the only question, then I'll take it on.
No, I have one more question on the fuel cost side. What was the consumption fuel cost in kilocalories in Q1 FY24? And sorry, I missed this answer. What is the benefit we expect to occur in the coming quarter from this fuel cost coming down?
Yeah. The first point is we have been indicating that we do not expect prices to be fluctuating too highly anywhere. This quarter, obviously, you have the impact of monsoon, but despite monsoon, we have not seen a huge slide in prices. The prices will remain soft, but I don't think it will crash in any way. we are proceeding on that basis that which has been predicted for the industry at large, that this year overall prices would remain flat. It might go up and down a little bit, but average pricing for the year will remain flat.
And on fuel costs, in this quarter, our cost on an aggregate basis was 1.95 rupee per million calories. In the next couple of quarters, we expect that to come down to around 1.70 to 73 per million calories.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, Namaskar sir, and thank you for a very elaborate briefing in your opening remarks. Sir, please help me with the net debt number, absolute number, our blended cost of funds, and our current year maturity.
Our net debt, as I explained a little while ago, is around 3,600 crores. As on 30th June, our cost of fund is 8.02%, which we expect to reduce gradually over the course of the year. And our total maturity is 491 crores.
And so when is our rating review due, sir?
One of that has already happened. Like CARE has already done its review.
Okay, sir. And I take the liberty of just a small submission here also, sir, that the message to be forward to our chairman that even other companies in the space also warrant attention the way the Birla Corp has been attended by Karaoke Saab and both sides. So please do convey the message that the other listed companies are also warranting the same kind of attention in the form of investor interaction through Concal and press releases. And a very elaborate press release, we hope for the continuity, sir, of the Concal and the release going forward. And all the best to them. Thanks.
Thank you. The other bit, please talk to the other when you're talking to the other manager.
It's a cross-holding, sir. We don't get an opportunity. But anyway, sir, I thought a message to be conveyed. Maybe, sir.
Thank you.
Pardon me for my unawareness. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, we will take that as a last question. I would now like to hand the conference over to Mr. Rajesh Kumar Ravi for closing comments. Over to you, sir.
Yeah. Hi, sir. Do you want to make any closing comment before we close the call?
I'll just thank everyone. Hello. Thank you very much, all of you, for joining. I would obviously your focus on numbers is very natural and commendable. But as far as Birla Corp is concerned, I would request you to look a little beyond the numbers. There is a lot of qualitative efforts which have been happening and has happened over the last few years, which I don't think was really factored in by the market. It was probably not visible. Now, because we are talking, because there's more closer interactions, you're seeing those things. I think that is something I would like you to pay attention sometimes, because a lot of things are actually goes beyond the numbers, and we are certainly not a company, I said, who are chasing capacity, because that cannot be our game. When you have people at 100 million and somebody else at 70-75 million, just by chasing capacity, I can't compete with them. I have to do things qualitatively, consolidate where I am, and that is what is going to generate value for my investors, we believe, rather than just simply chasing volume numbers. That's the strategy which we have been going so far. I think it's stood us in good stead, and we would like to build upon it. So when you are looking at us also, I would request you to pay some more attention to what has been done at a various qualitative levels. Thank you. Thank you so much, and really appreciate your joining, taking the time off. All the best. Thank you.
Thank you.
Yeah, Yeah. Thanks everyone for joining this call. Moderator, you may now conclude the call.
Thank you. On behalf of HDFC Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.